Hello, everybody. So today I want to talk about KULR. Absolute madness. This stock gets no respect whatsoever, even if the CEO casually extends a 100% growth guidance into the year 2026. So we have 18 months where he's telling us the growth rate of the top line of a company is going to be 100%. Third quarter in a row where the CEO guides this, by the way. The CEO reported, record quarter. This company, in my view, the underlying business is doing well, but the sentiment on this stock is ruthless. I may have found a stock that is more hated than Tesla. And Tesla is a big position for me, but I don't cover Tesla much on the channel because it is so hated and you get so many dislikes. I expect that for KULR. I've rarely seen a stock this hated. And this is to the point where, overnight yesterday, it was 30%, 25%, 27%. Beautiful evening. In the morning, too, the stock was up 30%. And look at that. The stock right now, as I record this, the screenshot I just did, minus 1.5%. You're talking about a stock that was up 30% this morning, and that may end minus 1%, minus 2%, maybe more. Maybe it will do minus 5%. I have no idea. This is crazy, the sentiment of this stock, on this stock. This is crazy how hated this stock. And I don't think this is warranted at all. I really don't think this is warranted at all. I cover a lot of hyper growth, hyper volatile stocks on this channel because on this channel, many stocks we're well over 10x territory. HIMS and Strategy, for example, stocks that have been going for a very long time. They're both still in 10x territory. You gotta be able to handle the volatility if you want to beat the Nasdaq. If you want to beat your 18% average annual rate of return, which is a great rate of return. But if you want to beat that, you have to be willing to withstand extreme volatility. And extreme volatility, that means not going all in at the top. And what I think happened for a stock like KULR is that you have a lot of people who went all in at the top. But if you exercise, good habits of an investor, small buys, ease into the stock, buy your position over a year and a half. Look at this example. I can go back to a situation where about 19, 20 months, roughly there was a 20-month period from early 2023 until late 2025 where you would still be nicely in the green if you had bought the stock. And any regular DCA strategy, let's imagine you find out about the stock even in mid 2022 and you have a regular monthly DCA strategy on KULR, guess what? You would still probably be up to flattish right now. I just think that there's probably a very high contingent of people who got right here into the stock and who are now just I don't know what the hate on this stock is very, very tough to understand for a business which, in my view, underlying the stock, there is a business that is performing. I've watched a lot of interviews from Michael Moe when I started getting into the stock, which, by the way, at $5, I'm about down 20% on my position. It's a minus 20%. It's nothing at all. This morning, I was up to 10% on my position. So this volatility doesn't faze me. Even minus 50, minus 80% doesn't faze me at all. When you're a long-term holder, it really helps you sleep well at night because you don't have your options expiring. I think a lot of people, they get misguided and they get short-term, short-dated options. And that's definitely not aligned with a company acquiring Bitcoin. And that's definitely not aligned with a company who's building space batteries. It's called KULR because it's a battery that's supposed to withstand minus 50 degrees Celsius. That's why it's called KULR. They build space batteries. They're a main contractor for NASA. Clearly these things take, I don't want to say decades, but maybe half a decade to play out, for a product line to play out. It takes a long while. So if you're going to get into a stock like this with options, I don't know what to say. options are short-dated strategies. This is a long-dated stock. This is a stock that could see its prime time in 2030. And we're in 2025. And the only reason why I got into this stock is because of the Bitcoin strategy. I think the Bitcoin strategy that they have gives it like kind of a hybrid play where you have a company which is in the space business, which in my view is early. I've said before, I think we are too early to invest in the space business. But when you combine the space biz with a Bitcoin Treasury strategy, then in that case, I am satisfied. And I'm happy to invest in the space business, knowing that on the back end, there is the Bitcoin saving the company. And the Bitcoin saved the company this quarter. They reported they gained $18 million on the Bitcoin balance sheet. So that Bitcoin strategy is giving them the permanent capital they need to be able to invest in the space batteries, which is what this CEO is and what this company is, right? They're right next to NASA. They're right next to the Johnson Space Center. Anyways, they're doing a lot of good things. So let's talk about this company. So first of all, this is a Bitcoin Treasury company that fits in my spreadsheet and that now looks cheap in my spreadsheet. Like, what is going on? Enterprise value over gross profit over revenue growth of this company is a 0.14. That's about the same valuation as HIMS. HIMS is cheap on my spreadsheet too. Now, of course, we are losing money. We'll get to that in a second, and we'll get into a little philosophy as to what actually that means. But the point is, going back to the original days of the channel and going back to my original observation that gross margin to me is what matters the most. EV over GP over RG is a cheap stock. How did I get to such a cheap number? Because look at this. 140 million is the cash. We only have $1 million in debt. 140 million is the cash. Balance sheet is approximately 140 million in cash and Bitcoin as of today. So you got to remove that 140 from the market cap of 220 million. So you get a company whose enterprise value is only $83 million. $83 million of the enterprise value of KULR. Because yes, Bitcoin needs to be subtracted because Bitcoin is a highly sellable asset. Like that's how it works. And much of that Bitcoin they were able to acquire because they harvested a price to NAV, a MNAV of a 4-ish in the beginning of the year. They harvested that and they were able to acquire that Bitcoin. That was a master move in my view, in my opinion. In the meantime, the underlying business is growing. Feel free to look at this. You can see there is some seasonality in their contract, but we're trending towards 5 million a quarter. And we were at 2 million a quarter 2 years ago. So the business has experienced 150% growth roughly in a 2 to 3 year period. This business is growing and the growth is speeding up. Okay, so quarter over quarter, Q2 25 versus Q2 24, they grew 63% year over year for Q2. So that's pretty darn good. But here's what I find more important as a forward-looking investor. They're still guiding. I don't know if it's not a formal guide, but they're still telling us that the revenue should double in 2025 versus 2024. So we have 2 quarters to go. And then they are telling us they would sustain that growth into 2026. So what am I seeing? I'm seeing 100% growth in 2025 and 100% growth in 2026. This is a fast-growing business. And this is the third time that Michael Moe says that. And so as a result of that, this is a high growth business. They have spotty revenue. Okay, that's fine. But they still have very decent gross margin for hardware. They're selling complicated hardware. It's 45%. And they're also moving from a testing service company, and they did a lot of tests for NASA batteries, etc., to now making their own products and selling their own batteries and designing their own batteries. And the cash cow of the business is actually the testing that they do for NASA. So all in all, I wish the stock had stayed up 30%. It would have kind of backed up my case when the underlying business is fine. In my view, underlying business is fine, but the stock price is just going to do whatever. So be very careful with options on this one. I have a few options on this one, and because I was like, okay, I like it, so I have a few options. I was hoping to phase them out. I'm going to phase them out. My order didn't fill this morning, so I didn't phase them out. But to me, the common is the way to go on this one, because the options, the derivatives on this one is not very developed. But anyways, so let's look at this. Let's look at the minus 100% EBITDA. And by the way, that's my spreadsheet. It blocks at 100. It fluctuates, but they're losing money. That's the point. They're losing money. So going back to my first love on this channel, which is gross profit, right in the beginning of the channel, when I had nobody following me, I was only focusing on gross profit, and this is based on my observation that what happens in operating expenses is very, very much different than cost of revenue. Cost of revenue is a loss, right? That's for sure. Your cost of revenue is a loss, and you're not getting it back. But after operating expenses, this is where you need to develop your own opinion as an investor. Let's read the 8K. So if you read the 8K, they talk about SG&A, right? Selling, general, and admin expenses. And, talking about their SG&A being very high. Anyways, it's cumulative. But they tell you why. Why have SG&A? Because of planned investments in growth-related activities that we anticipate will accelerate our growth forward, including advertising and marketing services, travel expenses, and stock-based comp for new hires. So, when you look at SG&A, do you look at SG&A as them investing in the growth of the business and reinvesting in the growth of the business? Or do you look at that as a pure loss? And the same goes for R&D. And R&D, they have a little bit of stock-based comp on the R&D. But do you see R&D as a pure loss, or do you see it as an investment in the future? I've long realized that as an investor nowadays in growth companies in the 21st century, your investment in R&D, your investment in marketing, sometimes even your investment in employees, right? I mean, you saw Facebook offering $1 billion for one OpenAI employee. Why would Facebook want to pay $1 billion for a single employee? Right, the best employees cost a lot of money. So do you look at that as a pure cost, like the electric bill, like the electricity bill? And the electricity bill would obviously be in gross profit. In cost of revenue, your electric bill goes there, right? Your inputs, the cost of your raw materials, that's cost of revenue. That's a pure loss. We agree. But do we always agree that investment in marketing or investment in, top sales team, do we always agree that it's a loss? And in my view, it's not a loss. In my view, in general, it's an investment in the future. The same thing can be said about the impairment expense. The impairment expense, they commented on the 8K. They said it was a deposit for equipment. But they're going to get the equipment, and the equipment is still there. And so impairment expense is a little different, but it's very similar to depreciation. And if you still have the equipment, you may have mark it down to zero, so you took an accounting loss. It's good for your taxes, you lower your taxes, but what about the actual economic value, right? This is why I use EBITDA. I much prefer EBITDA over earnings, because depreciation is a fake expense, right? Go to like an old carpet factory, an old rug factory. They have those machines. Those machines have been paid off more than 100 years ago. They still use those machines, but it looks like it's zero in the balance sheet. So it's essentially useful data in those metrics. Data that's very useful is revenue. Cost of revenue is the second next useful data. But to me, as you go down in the income statement, it's less and less useful to realize that. And so, of course, they are showing a loss. But it all depends how you view that loss. Do you view that loss as marketing taking advantage of the shareholders and just issuing new shares for the sake of doing that and stealing the shareholder, kind of an anti-capitalist, anti-business view of the world, or do you see stock-based comp, as a way to pay your employees without using cash? That's a big deal for me, and also it's a way, in my view, to make the firm anti-fragile. It's funny, I bring up anti-fragility in the context of Bitcoin, right? Because Nicholas Nassim Taleb is a big anti-Bitcoin guy, but he's right nonetheless that keeping cash on the balance sheet helps your company, survive binary events, and so I shares is the currency of a firm. The firm can print its own currency with shares, and it can pay for services. It can pay for employees with shares. And so in general, I've never had a problem with stock-based comp. I know a lot of people hate it, but do they really know why they hate it? Do they really know why they hate stock-based comp, right? Do you really have a reason? For a big company, I get it. For a big company, and the CEO drives the company into the ground, and they have a golden parachute, you're mad about that. Yeah, that I get, that I understand. But for high growth, cash strapped Bitcoin buying companies, I don't get it as much. Because you're much better off printing your own currency to pay your people than you are using cold hard cash that could be used to buy Bitcoin, or that could be used to buy machines for a business or anything like that. So always think about the actual economic value created, which is much harder to calculate than just a number on the balance sheet that was, an income statement right here, of course, not the balance sheet, but a number that was like just set up to fit accounting standards. Anyways, this is a hot sector. So let's talk about this business, and my point will be that this business is cheap compared to, arguably peers in the sector. So their KULR One platform, CEO on the call talked about their KULR One platform having success, being certified for the Artemis program. I don't know when that's actually going to happen, but the CEO was very positive about that. Their other businesses are services for NASA. That's their kind of legacy business: cell screening, cell cycling, cell rating. Essentially, batteries that go into spaceship, they go through testing. Calorimetry, that's one form of testing, and that's the cash cow business of KULR that they provide to NASA. And then they have the new business, and the new business is the exoskeleton business. They have some competition in there, but we know they started selling, and they will start reporting numbers on that in Q3. They said that in the call. You can look more about the business. You see, this is some pretty advanced stuff. Space batteries are very, very specialized, right? It's not that easy to copy. It's not something that you can easily copy. It's been a long time in the making, like I said, and these are my old slides. I'm not going to comment on them again, but this is their product, where they have a lot of hope that this could be hopeful in the warehouse sector, in the healthcare sector, etc., helping movers and people lift stuff. And the assumption, of course, is that even though humanoid robots are better, and rightfully so, they are better. We also heard Elon talk about potentially delaying by 1 year Optimus, because the original design is not as easy as he thought, and they're gonna have to delay Optimus by a little bit. So robots are probably a little ways away, but this is happening right now. This is the revenue right now, and it will be interesting to see how they do against the competition. I just researched this online this morning. There's actually quite a bit of competition. Most of them made in China, so there will be competition. But this exoskeleton thing is actually a sector that is surprisingly working and getting adopted, and so we could get some adoption with that, as sci-fi as this looks, and this looks pretty sci-fi. But anyways, you can see how we have all of the ingredients for hype. I really don't understand the sentiment on this stock. If I were to agree to the premise, which I don't, but if I were to agree to a premise that one stock should trade on hype alone, this is some pretty cool wow factor or hype factor, and so are the space batteries, and so are the. On the call, he mentioned that they developed a battery that withstands bullets, and they're going to be able to sell battery packs to the army because their batteries don't get on fire when they get shot at. Like, that's another cool factor. That could be another very cool video that you could put in place and put on social media. Anyways, and they're revamping that, right? They're working on communication with shareholders, etc., etc., etc. Anyways, let's move on to why I like KULR the best, because like I said, I'm fairly neutral on the space business. If the space business was the only thing, I would not be interested in this company. I'm interested in this company because it's a hybrid, because it's both. The hype on the space business, in my view, can be monetized by issuing shares to buy Bitcoin, because that price to NAV, that 1.7 price to NAV, that is mostly based on space hype, in my view. This price to NAV is not based on actual expectation of KULR acquiring more Bitcoin. In my view, this price to NAV, them selling $1 for $1.70 when they dilute, they mostly enjoy that valuation relative to their Bitcoin bag thanks to the space business. That's at least my view. And as a result of that, it creates very interesting dynamics where they have, at least that was my theory getting into the stock, they would have less of an impact on their stock price when they dilute, because it's not seen as purely diluting for buying the Bitcoin. So I call it a stealth. I call it a stealth Bitcoin Treasury company. Only future will tell if I'm right or I'm wrong. I've been wrong on many stocks before, so we'll see. But you can see they have the 300 million common stock offering in place, and so this is very good, because this morning, let's assume they ATM'd this morning, which I'm hoping they did. I'm actually hoping that a lot of the drop that we had today, right here, the minus 1% right now as we speak, from plus 30% in the morning, I'm actually hoping that a lot of the drop had to do with them hitting the ATM really, really hard. Like go ahead, issue 10 million shares in the morning and then acquire Bitcoin and put the news. I'm not sure. I'm not sure it was the case, honestly. But I'm hoping it was, because if it was, then that means you would have issued shares at 2x MNAV right now, right? And so strategy dreams of issuing at 2x MNAV. Similar dreams of issuing at 2x MNAV. For KULR, it would have been possible to do that this morning. And I hope they did. I hope they took advantage of it. But anyways, so that's the strategy. And they have a lot of Bitcoin to acquire, and hopefully most of that money goes towards the acquisition of Bitcoin. But it's okay if some of it goes towards the development of a space business. But the space business appears to be ramping, like you said, at 100% a year. So 100% a year, if operating expenses have been scaling up, but again, phantom expense versus real expense, you have to make yourself your opinion as to how much of that operating expense is actually unwarranted expense, right? How much of that is unwarranted marketing? How much of that is unwarranted R&D? Very tough to know that. But anyways, I prefer that they would just issue the shares to buy the Bitcoin, but I understand why they would also want to issue some of those shares to pay for the business. But it's blurrier for the market when you issue shares to pay for the business, and that's why the market tends to dislike ATM and dislike issuance of new shares. Another way to look at this stock as to why I think it's undervalued is we have other quote unquote pre-profit company. Both of these companies have negative EBITDA, by the way. Amprius and SES. One of them is amping up to be providing lithium-ion batteries for drones. Another one is going to be working on lithium. I don't know if they're lithium-ion, but on batteries for AI and humanoid, right? And I think also KULR at some point they will be providing the battery for this. That would make a lot of sense, because I saw a Makita battery on their demo. It's a Makita battery. It would make a lot of sense that they would just make a KULR battery for this that can withstand harsh environments. So anyway, so they're kind of they could get into the humanoid business, the humanoid battery business. They could potentially get into the drone battery business. And so when I look at Amprius 21x, again, not my type of company. When I look at SES, 13x times sales. Again, expensive. When I look at KULR, I'm at 6.3 times sales, 6.3 times sales. And I get that, of course, by using an enterprise value of 83 million, because I have to subtract the Bitcoin, because Bitcoin is not, as a famous Financial Times reporter once said 2 months ago, Bitcoin is not teeth. She literally compared the value of Bitcoin to the value of teeth. No, Bitcoin is a bona fide, highly wanted, highly valued asset by a lot of people. It is not the teeth of a Financial Times reporter. And so you have to remove the value of the Bitcoin. If you remove the value of the Bitcoin, you get to 83 million enterprise value. And they did, trailing 12 months, they did 13 million in sales. So that's a 6.3x. So you can see, I mean, Amprius is more than 3x the price. And the expectation for KULR are 100% revenue growth going forward. I don't know what it is for Amprius and SES. I sure hope it is more than that. But you can see this stock, in my view, is heavily undervalued because of sentiment and on a pure cool factor. Not that we would care, but if hype is going to be a reason for a stock to be expensive, like, how cool is it to have your product on Mars? Like, come on, you have your product on Mars, your product on the space station. This stock should be trading at a higher valuation. This stock should see some hype. And I'm very happy to sit in this stock for years until I see the day where it's actually recognized for this. Because no, it is not easy to do batteries that can withstand minus 50 degrees Celsius weather. It is absolutely not easy to do. Anyways, it's not easy to copy. So that's why when you invest in R&D in a product that is not easy at all to copy, you got to ask yourself, is that R&D an expense? Are they losing money? Are you really losing money? Or are you building something that will only see value in 2030? And let me not even comment on the call questions. I'll finish with that. I think the team handles the question very well, but the questions were so confrontational. Like, oh, please don't say that you haven't had time to do X, Y, Z. Very confrontational question. And management yet very, very bullish. So listen to the call. Yeah, like I said, and I'll finish with this. I really think Wall Street just doesn't understand the concept of selling $1 for $1.70. But from what I see, KULR is going to keep doing that, and that's good. Because if you saw my last MicroStrategy video, you saw me complain that Sailor, a mild complaint. It's not a big complaint. I still trust Sailor. But you saw me, maybe whine because I wanted Sailor to be selling $1 for $1.50 right now, which is roughly their MNAV, right? So, and he stopped, and he says he's only going to be doing it for $1 for $2.50. And, to me, if you sell $1 for $1.70, well, this 70 cents is margin. That's a very, very good margin. And if they stop doing that, do you think sentiment would actually improve on KULR if they actually stopped doing that? I'm not so sure. I'm not so sure. And keep in mind, and this will be the final point that I've made on so many stocks, the markets have been just awful this August, and in my view, it's I don't know where stock buyers are. I don't know where analysts are. They're on vacation. They're not there. September is going to be, in my view, a great revelatory market. In September, we will see the valuations adjust to their true worth for these different stocks. In my view, in my hope, and probably later part of September after the Fed meeting. I think it's on September 18th, the Fed meeting. Anyways, so I'm not worried at all about KULR. I'm very happy to own the stock, and plus 10% in the position in the morning, minus 20% right now. I really don't care. This was not investment advice. This was not financial advice. This is only entertainment. I'm hoping you are entertained. No hype advice either. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.